We call it a one call close. So the issue new agents will have is going from the informational of providing the info and then submitting an app. Welcome to Agent Q&A. You got your host here, John. We got Joanne. We got Albert. So first off, before we get started with our topic, any one of our guests have any specific questions we want to address? Any questions as far as underwriting, recruiting, product knowledge, anything in the field, experiences? Feel free to unmute now.
Yes, I do have a question.
Sure. Great.
Okay, so I'm going to start the calling the leads. Okay.
Great.
And I'm just kind of still trying to figure out, because I've never done this before. When you call them and then you start getting the information, do you put the information directly to in the software for the illustration, or do you write it on the paper first?
So are you asking about the initial conversation and you're already quoting them, or you're creating an application for them already?
No, this is like fresh. I get, I buy leads, I get the leads, I call them, and let's say, they respond, and and then what is the process? I mean, like, do you put like the information right away in their, let's say in Americo or something? How do you do that?
Okay, I think what you have to do is you only need to put any information if you're doing an application. So you want to organize your leads from dialing the leads, and then have an organization on how to quote. Because to quote, you don't need a client information at all. All you need is their age, their health, basically their age and the face amount that you want. For example, if you want to use Americo, you could just go to quote.americo.com. So if you're talking to a client, let's say they're 60, you just go to the quote, age 60, male, female, how much coverage, 10, 20, 30,000. You would quote the client there. And if they agree, then you would start the app and then you would put their information in.
Okay. So you get the information after they agree with whatever that you offer.
Yeah. But I think maybe your question, Cecilia, if you're buying leads and you call them, what you want to do is you want to have a bunch of either piece of paper. What I would recommend is the field underwriting or the final expense inventory sheet. So just have that sheet in front of you, because then number one, you're going to ask the client the basic information, like if they currently have any insurance, if they have anything that works like insurance, if their height, weight, medical conditions, if they smoke, all this other stuff. So you're going to gather all that information during the discovery portion of the presentation first, right? So if you go on the Google Drive, if you go under field materials, there's the final expense inventory sheet or the client intake sheet. So you want to print those out. I would recommend that's how you start. Like for me, I write it down on a notepad. So I already know what questions I need to ask. But if you're uncertain, that's a great way, because you're going to follow along and just ask all the relevant questions that you'll need. From that point, after you gather all that information, you'll be able to determine if this client is uninsurable. Then you can go with AIG. If they're pretty healthy, if they just have just basic stuff like diabetes or whatever, you might still be able to go with Americo or Prosperity. So this way you can determine up front before you quote which product to quote. Is that the question you're asking?
Yeah, like the process.
Yes. Basically. Okay. So it's that. So you want to have that sheet in front of you. So you're just going to follow those steps one by one. So when you get someone on the phone, you'll be like, okay, great. And I'm going to send you my business card. You can send that first, text it over to them. And then you're going to proceed with those questions. And then after you gather those questions, then you can figure out which to quote with, which carrier and which product. And if you have a question at that point, you can text John or myself, and we'll say, hey, go with this product.
Yeah, I think what happened is you're confusing all the processes in one. So first you have the lead, right? So your first process is you contact them. You create a rapport and connection with the contact. You establish a need of needing their life insurance. And then the next step is the underwriting phase. Underwriting phase is you qualify them to see which companies and carriers you can qualify them on. And then next step, you're quoting them with that specific carrier. Once you quote, you get them to agree. Final step, we do an application. I think you were thinking at the start, all right, I contacted you. I'm putting you on the application already. It's not a done deal yet automatically.
I think she's asking where to put what type of information she would need to gather and where to put it.
The underwriting part of just
typing it before quoting.
Okay.
Yeah.
So so that inventory sheet's where you want to put it all down, because that'll guide you along and make sure you don't skip any steps.
Mm-hmm. Yeah. Okay, so I mean, like, so it may take more than one meeting then? I mean,
no, it should all be one. So the thing is, the first one might take you a little bit longer because you're trying to get familiar with it. But after you do a few, then you know exactly what to ask. You can anticipate what the client's going to say, so you can move through it very quickly. So you'll be like, so for me, I would ask, do you have any major medical conditions? Do you take any medications for anything? Ever been prescribed anything? Have you been hospitalized in the last couple of years? And then from there, I can determine. If you don't know specifically what to ask, then you can list off all those. Be like, hey, I'm going to ask you a bunch of questions. Stop me if it's yes to any of these. High blood pressure, heart disease, diabetes, whatever. And then you can run through the whole list. And then from that point, it's just simplifying things. Make sense?
Yeah. Let me do one quick presentation for you. It's literally 5-10 minutes if they don't have any medications, right? Okay. So let's say we just bought the lead. You're the lead, Cecilia. I call you, right? So ring, Cecilia, this is John. I'm calling you because you requested information online requesting for life insurance. Did you need to get life insurance on you or for someone else? We'll do 0 objections real quick. So you can just see the process. Okay, what would be your response?
Yeah, I'm just thinking about, to get some for final expense.
Okay, great. So that's my job. I'm a broker. I represent 30 different life insurance companies to provide for you. And it's very easy to process. Here's how what we're going to do. I'm going to ask a couple of questions about you, your age, and your health to figure out which company you can qualify for. I'm going to present you these 3 options. And then once you pick the options that's going to be fitting to your needs and your budget, we're going to submit an application for coverage. Does that make sense?
Okay.
Okay, so let me just ask you this. Okay, you're healthy, you're good. All right, so here's 3 options available for you. The company name is Americo. Here's the 10,000 plan for $50, 20,000 for 100, 30,000 for 150. Which option works better for you?
Okay, so you just give quote from one company, but 3 different options.
Right. So don't overdo it, because I've seen agents where they're like, oh, Forrester's is this, Americo's is this, Mutual of Omaha's this, Prosperity is this, and if you want this.
I know, I'm like trying to figure out, oh my gosh. And then I heard, because I've been listening to different, thing, and they said that I'm licensed with every, all the insurance out there. And I don't, that's not true. I mean, I don't want to lie, right. I just don't lie. I don't care what it is. I don't lie. I want to do the right thing for the client. So, so actually we are, so we have 30 providers.
30 plus. 30 plus. I mean, we're not going to use all of them, but we have a portfolio.
Oh, to add to that, some agents, they don't even say the carrier's name. They just say, okay, I find you a plan, a 10,000 plan with this company. That's all they say. It's 10,000 for $50. Because at the end of the day, they want to find a good face amount and price, right? Now, if they want to know the credibility, you can expand on it. Yeah. Okay. So some people say, I got a bronze package. It's a $10,000 for 50. The silver package, it's 15,000 for 100. The gold package is 20,000 for 150. You can spice it up however you like.
So yeah, and we would recommend going with Americo or Prosperity because it's instant decision. There's a pre-check part at the beginning of the application. If they give you the okay, you start the application, it'll do the pre-check. So then if for some reason they don't qualify or it grades them, then automatically it's going to move it to that, or you can know to pivot to another carrier. With some of the other carriers, you're going to have to send it in for a decision. It may take a couple of days or a week, and then you got to go back to the client and say, by the way, they didn't accept you, or it's a new rate or whatever it is.
Okay, so I want to be very familiar with Americo, and then what else?
Prosperity, and then have AIG as the last resort because
AIG. That's for the people with lots of health issue.
Yeah. Well, guaranteed issue. So that's a last resort. If America or Prosperity can't take them.
Okay. Oh, yeah. That's Rico is asking about people with PIN. I think John already mentioned.
Oh yeah. So we have American Amicable. Yeah. So request that on your NLC.
American. I think I'm already have it. American Amicable.
MM.
MM. So that's the one that TIN number. Okay.
Right. ITINs.
So so you guys don't use Ethos?
We do.
We do. I mean, the comps higher on Prosperity in America, so we'll lead with those.
Okay.
And the Ethos is a really simple process. I mean, the thing is, Ethos will kind of reserve for the clients if they get kind of like sketchy and then they don't want to give out their information. We'll just say, hey, we'll send you the link. You can do it yourself. Or the clients that we can't ever get a hold of, send them the link. Here, you can do this yourself if you want, if you prefer.
Oh, okay.
Yeah.
Okay, because they are the one that keep reminding them to finish it.
Right. Ethos has this final expense plan called True Stage Whole Life. So it's useful, but
I don't want that.
What's that?
That's the one that my husband got.
Right. He did it for Rico, right? True Stage.
Yeah.
So they're good.
Yeah. Okay.
Great.
So that's it. It's a one. We call it a one call close. So the issue new agents will have is going from the informational of providing the info and then submitting an app.
Hi everyone, thank you so much for watching so far the Q&A. If you guys have any questions or comments, please leave them below. And if you guys like what you guys are watching, please make sure to like and subscribe to our page.
So you want to learn the process of that transition. Okay, so here's an example. So quotes are quotes. What we have to do now is we got to see if we can qualify you. So we need to submit an application. Okay, we're going to need 3 things. Okay, we need your ID, your social, and your payment method, which is your bank account. It's not going to be okay to continue. So clients will give you that hesitancy, or they'll stop you right there. So that's where you want to learn to close, learn the objections and the rebuttals for it.
Okay. And do they accept credit card or no?
Ethos does.
Prosperity takes debit card, and the Ethos takes credit card and debit card.
And then AIG for the sick, they can take credit card.
Yes.
AIG take credit card.
Yes.
Preferably, you want to have a bank. Banks are the best.
Yeah.
American Amicable.
What about American Amicable?
I think they only take
just bank draft.
Bank draft.
Bank, or you put them on direct bill if that's an issue. It's less likely to happen.
So if they ask for TIN, do they ask for status in the US?
With MM, I think you need to have a secondary paper for it. That's what that lady said on the conference. There's like an additional questionnaire.
What's the secondary paper?
Like a additional questionnaire about like their ITIN or their. I don't think they care too much about. It's a gray area, is what they're saying. They don't care too much about their citizenship. Mm-hmm. It's more about like them living here.
Okay.
We'll come across that when that happens.
Yeah.
I know.
Reach out to us.
Yeah, no, it's Rico the one asking me, so
yeah.
It's all right.
No problem.
Yeah.
Okay.
Any other questions?
Yeah. I mean, well, we just have to do it and see what happens.
Right.
Well, are you what type of leads did you buy, for final expense or for term?
Mortgage I've been going back and forth with Rico. I think I will just buy to try the internet and final expense.
Okay. That's the way I would recommend. That's the easiest to start off, because final expense is just final expense products, just whole life products. If you go with mortgage protections, then you got to know term of return of premium, sometimes an IUL. So there's a lot more moving parts. So final expense is a great way to start, is build out your base and then work your way up to all the other.
Yeah.
And if you guys,
sorry,
if you guys can get some local leads and try to running them, you'll get more, I would say, chance of buffer of mistakes. Because if you kind of make a mistake on the phone, or if you slow down, clients can hang up on you, right? But if you run an in-person appointment and you're a little bit slower, and all you have to do is tell the client, "This is my first time. I'm a little bit new." They'll be more patient with you because you're in front of them.
Oh, in front. So because if we go in person, I mean, that's what we do all the time in Canada.
Right.
It's okay, right? If we go together, like me and my husband.
Oh yeah,
sure.
Yeah.
People
you can bring anybody. Somebody just brought their kids before.
Okay.
You're good. You're fine.
Yeah. And then, after I'm familiar with this, all I want, actually, I want just to focus on IUL after this. I just want to get familiar with the.
Good.
Yeah.
And then if you want to focus on IULs, there are future IUL leads. Yeah. Even ILC has IUL leads now too.
Right.
Mm-hmm. Yeah. Because, I think that's easier. That way I don't have to know so many providers, just a few,
Right.
But I mean, if you know how to do an IUL, final expense isn't hard. The only thing hard about it right now is that you're unfamiliar with it. So
Yeah.
after you just get familiar with, I mean, if you know how to do this, you can do everything. So
Yeah, it's just I'm not familiar with the process. That's all. With the leads thing, that's the only thing that I need to overcome.
Yeah. Well, so we walk through once you bought your leads, you call them, how to do the discovery and gather the information, and then quote. So to quote, you go on quote.americo.com.
Quote.
.americo.
Just want to make sure all of this is in my favorite. That way I can.
Yeah. Yeah, bookmark all of this onto your browser too, so you can have it.
I would bookmark it on your iPhone as well. I quote off of my iPhone.
Quote.americo.com is the first one. The prosperity one is
insuranceadmin.com. And then just click on
insuranceadmin.com.
That's for prosperity.
And then you log in and you'll see quote engine.
Okay.
And then AIG is AIG.com/GIWL.
GIWL. Okay.
And then the Ethos one, you just log on your Ethos and.
Yeah, I love Ethos. It's so easy. I mean, I like it. I just wish they pay residual and all this thing.
Yeah.
So they're trying to make money in the back end.
But they give you free will and the other one.
Great. They got a lot of great things going. Mm-hmm. But I mean, just especially because if you're building a team, you want to just have knowledge of how all these other ones work. So good job to you for doing so.
Mm-hmm. Oh yeah. So about Helen.
Okay.
Once, I don't know, is he done or with the onboarding? Or
you have to follow up with them. So Joanne already sent a welcome email.
Yeah. I think she was filling out some forms yesterday.
Yesterday she was completing her SureLC profile.
Okay.
Yeah, so she can if you're helping Helen, she can just do steps 2 through 5 now from the welcome email, and then that should move her along in terms of contracting with the carriers.
Okay, step 2 to 5. Okay, yes, we're going to meet with her at 4 today.
Yeah, okay.
And then after that, I will be, but with her, she's already, I mean, she do health, that's her main thing. And she's still working as a, what do you call that? Casual teacher in the for school district.
Yeah.
So so she will but she already have license for a while, but she never used it because she doesn't have the good experience with WFG. So so she has already booked a business with her health
nice.
Medicare. Yeah,
right.
She knows what she's doing. We just got to get her through the first part of onboarding.
Yeah. Okay. I think that's all my question today. Thank you.
All right.
Good question.
Yeah, great. Awesome. So let's go into our main topic, which is going to be chargebacks. Yeah, everyone loves them, right?
It's part of the business.
You
can't love the other aspects without it.
If you don't have them, it means you're not really working.
That's true.
You're not doing enough, right?
Yeah.
So that's going to be we're going to split it up in 3 topics, like why do agents get them? Okay. Why or how do you prevent it? Okay. And 2, what's our mentality to it? Are we fixing it versus we're going around it? Okay, by using other carriers and what? So first off, why do agents get chargebacks? What would your main?
That's an easy one. The reason why agents get chargebacks is because they write a little bit of business that they didn't follow a system. First of all, they just saw this as an opportunity for them to make some side money and to make a quick buck. And they're like, oh, they're going to pay me for doing this. So they work a little bit. They write up people they know, maybe they'll have low hanging fruit. They'll sign them up. They get paid, stop working.
Yeah.
That's how chargebacks happen. Right?
There's no consistency or anything at all, right?
The other main way why agents get charged back is because they don't buy leads. If you don't buy leads, then the thing is you're constantly depending on some quick way to try to make some money, because the thing is you don't have a systematic way of running your business.
Right.
So you fall behind financially, and then you're like, oh man, I'm desperate. Rent's coming up. I got to pay my car note. I got to take my girl out to dinner, and I don't have any money. Let me just write up a policy on so and so, and like without mindfully thinking about your long-term prospect for your business. And you're just thinking, I just need this money right now. And then because you didn't have that system, then you write something that you shouldn't have, and then it's not going to stick, probably because you did it out of position of weakness rather than a position of strength.
So there's two real chargebacks, two kinds of chargebacks. There's the fake sale chargeback, which would be like a quick sale. You wrote up a friend or a family member, and people do that all the time for a quick buck.
Right.
And then there's the real chargeback, which are clients with some situations of, you help them out. They need the life insurance. They requested it. It's a lead type of a chargeback.
Yeah.
And something happened, right? Which one's faster to fix? Which one's the easier to fix?
The second one.
Yeah.
Okay. Which one's easier to prevent? Right. So if you want to stay in the insurance business, try not to write controlled business. And if you're going to do it as a controlled business, try not to get paid on it.
Right.
That's why insurance companies have these rules, because they know it's so easy to write up a friend, family member, your mom, sister, brother, wife, kids, get a quick buck, let it fall off because you needed that money. And next thing you know, you got a couple of thousands of dollars of chargebacks.
Right.
And now as an agent, you're thinking, oh, okay, well, how do I get out of this? Dude, you shot yourself in the foot.
Yeah.
Right. So now, can we fix those type of chargebacks? No, we probably should get the FBI involved on.
Right.
Can we fix that agent? No, that agent did something wrong. But let's talk about the real type of chargebacks, then the lead type chargebacks. How do we prevent that? What are the things that a new agent or any agent can do to maximize their chargebacks or persistency? Minimize their chargebacks, maximize their persistence.
I would say one of the things that they can do is probably make sure that the customer can afford the insurance policy and that they have the funds to be able to consistently pay it. And then also be very upfront as to how long they're going to have to pay their policy for, right? So if they're going to have to pay it forever, then you let them know it's going to be, this payment is going to, be reoccurring forever until you pass away and then it pays out. Or if it's like a term policy, then you let them know this is like for 20 years, your next 30 years, and this is what you can expect.
Okay.
But maybe sometimes I feel like some agents won't cover all of that information because they want to have the sell. So they exclude some of the important stuff. But then when the client finds out, it may not really be within their budget to keep. So.
Yeah, we've seen that where an agent overemphasized a couple of things, or they add a little bit of a sprinkle into that type of policy when it's not supposed to be that way, to make it look a lot better than what it is.
Yeah.
And next thing you know, the client sees the policy, gets the policy in the mail, and then it cancels.
Right. Yeah. But yeah, I think that's some of it.
So being truthful.
Yeah.
That's one thing. Making sure the client's it's an affordable thing. Right. What other suggestions would you have?
Well, that's a really good one to not oversell and make sure you assess the client's actual needs rather than your needs.
Mm-hmm.
That's a good one. But I think overall, if you were trying to prevent it, the most important thing is to go all in on yourself first. Like, make a commitment. Like, if you're going to do this, do this. So then, if you're going to commit to it, commit to yourself. Purchase some leads. Have some type of systematic way of doing it ongoing rather than doing like a hobbyist.
Yeah.
If you're a hobbyist, I mean, guarantee you're probably going to have chargebacks, because first of all, you're not that good because you haven't done this long enough. And then, so if you write some business, it's probably going to fall off, even if you meant it to or not. Right?
Yeah.
So then that's one thing. And then if you don't have the leads to consistently keep having some positive cash flow going into your accounts, there's always going to be that, because we talked about the first two, which is, you're in desperate position and, you're not working consistently. But the third one is, there's legitimate chargebacks.
Right.
Like, there's normal attrition that occurs within the life insurance business. And you should lose maybe about, on average, anywhere from like 15 to 30%.
Mm-hmm.
Right. And that's normal, because people die, people, lose their jobs, people, whatever, things happen from time to time. Maybe just, you submitted someone, you thought they were supposed to qualify and then they didn't. But that's never really an issue if you continue to work. It's never really an issue if you continue to work in a legitimate fashion.
Right.
If you got bad habits to start and you've generated some chargebacks and you keep doing the same thing over and over again
with different carriers,
and then You just keep pushing it and keep pushing it. And, and for those people that say like, yeah, I didn't really mean to do that. And blah, blah, I'm like,
come on, man.
It's like, you're not you can't be like a benevolent bank robber. Like, you can be like, I'm just going to rob this bank, but it's only because I really need this money and I'm going to pay them back.
I'm going to change. I promise next month, next year, tomorrow.
Because if your business model is to like rob a bank, and then in your twisted head, you think you're somehow going to fix it later, and then you're still the good guy. The thing is, you're not in a position to be able to make that money to make it back legitimately anyway. So what are you going to do? You're going to keep robbing the bank. You're going to keep robbing banks until you get caught or get killed.
Yeah,
like that's just not a good plan long term.
And then that's where we sometimes see it, where agents have multiple chargebacks and then thousands in debt. It's like, dude, how do you get out of this? How do you dig yourself out when you've jumped off in a big hole doing the same repetitive thing over and over? Now you have multiple chargebacks left and right from carriers and carriers.
Right.
So what do we do? Right? How do we fix it? Well, first, you got to have a system of making real money in this business. It's not just finding a sale here and there instead of working for the sale. Because the issue then is, you think you're making money in this business by having the easy way of making these sales, but you've never really learned how to sell. You've never really learned how to deal with the client, call the lead, sell the lead, and then continue to forward with the business.
You never went all in on yourself first. You were just trying to figure out how to make money with doing the least amount of work.
Right.
Or no work.
Just, hey, I need a sale. You got a bank? You got a car? Can I write you up? So what do we do in these situations for these agents? What's our suggestion?
I would suggest if they have a chargeback with the carrier, I would suggest for them to focus on, like, if they don't have the funds up front to be able to pay back that debt, then I would suggest for them to focus on selling that specific carrier to their next sell, for example, so that they can reduce the amount that they owe.
I would say not an admin, but from a manager standpoint, how do you prevent an agent from doing this in multiple carriers if they owed one already? And this is their comeback. Well, I still need to make money. It's hard for me to make money while just paying off the debt.
Well, you and I have learned a lot from this experience because we made tons of mistakes, and we're good about tracking our business and understanding things. So sometimes I think we just became a little too soft, and we became a little too we're too overly sympathetic to the agent.
We saw too much good in the individual.
We trust the people. Maybe we trusted them more than our judgment should have allowed us to.
Right.
And so that's 100% our fault for allowing it to get that far with certain agents, which there's going to be a price to pay, or we're going to deal with. But I think we just need to keep them accountable sooner. So if we recognize something and just, like you did a good job of doing that. You saw one agent wrote another agent, and then you're like, hey, this looks fishy. Yeah. So we're like, let's call him. Hey, what's the situation? Can you explain to us what happened here? Are you going to keep it? Because if it sounded iffy, either terminating you or as earning you for everything.
Right. And then we keep it very, very like upfront. It's like, hey, we watch our business like a hawk now. We see what's happening. When an agent writes another agent, it's super big fishy. Just wanted to get your input on it now. And it kind of puts that agent on notice. Like, hey, first instance, we're watching that. Right?
Yeah.
Just the fact that they know someone's watching, that could alter their thinking.
Yeah, because I think before what we did is it happened. We kind of knew, but we didn't say too much, right? And we let it work itself out in a sense.
Well, did they actually write good business on this agent? Like, did this agent need the policy, right? Like, you give them the benefit of the doubt as opposed to confronting them in a sense and saying, like, hey, like, this actually looks fraudy and we're going to do this or that to you. Yeah, because it continues. Because, like, at that point, I feel like if agents are leading into doing fraud that way,
and if they haven't been caught,
that's just how they're going to do business. That's a part of who they are. They're going to be shady like that and try to.
Or sometimes they don't understand it, because I think there's definitely some that are trying to get away with as much as they can.
I don't think they understand the repercussions.
Yes,
yeah, they don't understand the repercussions for sure, but they understand that what they're doing, they should not be doing.
Or they are so delusional that they genuinely believe they're going to be able to pay this back. Because they're like, I just need this right now. I'm just going to get this payday advance loan. The carriers will pay me. and then afterwards, I'm gonna fly right after this, and then I'm going to fly straight, and I'm gonna make sure I build up enough money. But you never develop those habits to actually run a legitimate business to begin with. And one of the biggest mistakes we made was just like, we're like, hey, you wrote your mom again, like or what's the deal with this? And they're like, oh, she really needed it. Then we're like, okay, we're like, we just kind of accepted it rather than been like, okay, well, there's going to be repercussions here. Like we let it go on for a little too long, and that's 100% our fault. And
so like when I look at it from our end now, it's like, okay, the agent and what they're doing, can we control that? Not so much, but what can we control as far as talking to the carrier from admin to FFL? Okay, here's a couple of things we're going to do. We're going to earn you on these carriers. We're going to have you pay off that debt. And if you don't make a motion within a couple of months, what do carriers do? They terminate.
Yeah.
Right. What do we do when we were making these mistakes? We let it linger. Right. We thought the good of the individual is saying that they're going to pay it off, and we turned a small debt into a bigger debt.
Right.
Yeah.
So we enabled some of that based on our lack of action. So
right. And us being nice.
Us being way too understanding.
Yeah. So going back to the real type of lead chargebacks on fixing those things, there's a couple of things that you can do as an agent, right? If you're losing 15 to 30%, 30% is a high clip. 15 to 10 would be good. But if you're losing these businesses, you got to understand there's actually a reason why these clients bought. So you should be able, out of the 30, the 15 to 30, you should be able to save maybe 5 to 10% of that. Right. 20, 30% of that. If you're really good, maybe you could save 50-50 if you prevented it from the beginning, right? Quick follow-up. So we just want to give you some decent advice on a follow-up on the client. Hey, we missed your payment. Maybe you had an NSF, insufficient funds. I would follow up immediately within that client. So what I would do is when I write business, try not to post date it. Okay. Try to get that business issued right away so the first premium comes in. Okay. But if it is post dated, we deal with clients, sometimes they're disabled. They want their money coming out on the 1st or the 3rd of the next month. You got to follow that business. Okay. If you wrote it early in November, it doesn't draft until early December. Make sure that policy comes in. And then if it doesn't, you already know you can contact the client already. Before it goes 2-3 months, you let it linger, and now you contact the client to try to save the case. Now they owe 3 months. Okay, I just saved the case. One of my Aetna clients, the first premium didn't come out in October. Funny enough, with Aetna, they tried to charge twice. It didn't go through. So now Aetna says they need to call in and do a 3-way to verbally authorize the next draft. Well, during that time, I asked, well, since the October premium didn't go through, can we reissue for November and only collect 1 month? And Aetna said, yeah, cool. Yep. We'll put it back in place. So now we just reissue the policy that I sold in October to reissue in November, 1 month premium, client's happy, back in place, save the case. All right.
But that's kind of the mentality too, because I think the situation that Joe brought up earlier was if, you're overselling the client. So there's legitimate cases in which an agent buys leads, they're trying to do the right thing, and then they have an abnormally high amount of people canceling or
they're overselling.
Off. They're overselling or something in their presentation is broken.
Right.
So that's when you got to go back and kind of reevaluate. So I've run into a couple of situations with agents. I'm like, hey, your chart, your persistency is really low. You're not keeping most of the cases you're writing. And then they're like, well, what am I supposed to do? Like, and I'm like, let's hear your presentation. It wouldn't give it to me. Right. Mm. So, and I'm like, so, but if you're not confident enough to tell me what you're saying in the house, you're probably doing something or you're cutting corners in which it's not a productive or nor profitable, practice anyway. So the thing is, the carrier is going to cut you at some point, and then it's going to terminate you. So I think that's the first step in just being mature enough to recognize, hey, if you're out of the normal range, if you're keeping less than 70% of your business, there's definitely something wrong with your presentation, and you need to get that fixed ASAP, because not only will you not make money, but the thing is, you'll probably get terminated across the board with all the other carriers, and you're losing your livelihood in this particular field. So the sooner that you can recognize that and get that fixed, it could be fixed if you want it to fix.
Yeah. Speaking of presentation, I wanted to bring this up. We call this the suicide close. You want to bring it up? You want me to do it?
You can do it.
All right. So do you know what a suicide close is?
No.
So an agent, we would hear this all the time. And then we knew like, bro, this agent's not going to last. So with suicide closes, instead of closing on the value of the product and making sure that the insurance is there for the client, you're suiciding the close by saying, hey, let's just get the app in. You could post date it 30 days later. And then after 30 days, you could choose to cancel if you want. You can review it, keep it, cancel it. It's up to you. But let's get a policy in. What did you do? You forced the client to get an app in, get the first premium in, so you can submit, get your advance. Yeah.
Cancel.
You gave them the way out. So it wasn't even solidified at the start.
I've heard agents do that though.
Yeah.
And then the client has no genuine intention of actually keeping the policy. You've kind of just like, oh yeah, just do it. There's no harm in doing it.
Right.
Yeah.
Let's see if you qualify. That's it. And then you collect the premiums, or worst case, I've seen some clients or agents put in different bank accounts in the meantime to get it approved. Put it in a different bank account, put it into a Chime account, a Cash App account, just to get the policy issued. And then they said, yeah, the client wasn't comfortable putting their bank account information. So I'll update that later once they figure out that they got approved. Dude, that's
not a solid sale to begin with. Like if that was true, which it's probably not, then if it's true about what they didn't feel comfortable giving their bank account, then like if they're not comfortable giving their bank account, then number one, they didn't buy you or they didn't buy this product to begin with. Like you're just forcing this through so you can get paid.
Forced it.
Right.
Like, made
pretty obvious.
Found ways to fake around it.
But if you're script and if you have built that rapport with the client, then they don't typically have an issue giving you their actual bank account information.
Yeah.
If they saw that genuine value in that life insurance policy or whatever you're presenting to them.
And then you could build a report. They still will, sometimes say, I don't feel comfortable. That's when you send them your ethos link. Here, send the ethos, fill it out on your own. I can't help you. I flatly tell the client, I can't help you because the insurance company needs to get three things from you. Your identity. To confirm your identity, we need your social and your ID. And then to make sure you're serious about buying life insurance, they need a method of payment. If you're not providing that, what's the purpose of mailing you information? What's the purpose of underwriting you to see if you qualify if you're just saying, never mind? You're not serious. Yeah. Lennon, did you have a question or input in mind? I know you tuned in.
No, I was just going to agree. Me and Darren actually started doing, I'll show you my board right here. We started doing a kind of like rating our clients.
Nice.
And so we would rate like all of our clients on this board. This is ones I sold last week. And all of them were out of 1 to 10. They were higher than 8. They were 8 or higher. Every single one of them made their first payment. This is this week so far. And all of them have already made their first payment. But I think that whenever I first started, I did not track. I didn't track like how much I trusted the client. Or I'll walk away from a sale if I don't believe that they really want the insurance. So I know insurance. I know it's an emotional sell, but I talked to him. I was like, "Hey, listen, if something happened to you tomorrow, Sue, if Jack passed away tomorrow, would you be able to take care of his final expenses by yourself? Or would you be able to take care of the house by yourself?" If they tell me no, then okay, perfect. This is what we're going to do. We're going to get something put in plan, a place put in plan, a plan put in place. I'm sorry. Yeah, that would take care of this for you and your family, like once and for all. And this is how they're going to do it. They're going to verify your social security. That way they can verify who you are. Then I'm going to get the routing account number and they're going to draft it once a month. So if something happens, you get put in the hospital, you're not able to make the payment, it doesn't matter. They draft it once a month. So you have that policy whenever you need it. Does that make sense? Yeah. Okay, cool. Then I know I can go forward. But if I have to force it, I don't even write it. I won't even like spend my time on the phone because I know that at the end of the day, if they got to think about it, I'm not going to think about it. I'm not going to think about putting them in a plan that they're not going to want because it's not my money anyways. And my ultimate goal is to try to protect them. And if I'm not helping them and they're not in a better situation when I leave, then it's no use in writing a policy that you don't really trust. So we started doing the 1 to 10 to try to see how much we trust it.
Okay. So you started grading it.
That's a serious businessman right there.
Yeah. But the mentality of where Landon's coming from is he has full control. Okay. You have a business flow of, you got people to sell, real people to help. So you're okay to walking away to people that don't need the help or don't want the help, right?
Yeah,
Whereas,
that all comes from having a flux a max amount of leads. I got plenty of at bats. I don't have to worry about swinging and striking out and get the pressure of, hey, if I don't write this one, then what about this one? I had a $2,000 chargeback pop up with Americo, and it was paid the next day because I was like, hey, I'm just going to write everything Americo today.
There you go.
It just changes your mindset when you got more opportunities. You're able to swing and have an opportunity to close one, and you don't get that pressure.
And that's where the chargebacks don't matter when you have enough people to see, people to help, and you're continually selling. So for the agents that are not selling enough and are selling one-off, 1-2 here and there, we got to look at your business in a real investigation, because at that point, you're just doing this to do it here and there, and it's not a solid business foundation for you.
Yeah, if I could say, I mean, this is one thing I learned early. Like my manager, when I first got into sales, she put this in my mind and always stuck with me. It's not about how much you can write; it's about what you can keep. Mm-hmm. Because the thing is, if you write a policy and then you get paid on it and then falls off, not only does it have no value, it actually has negative value. Yeah. Like the thing is, it hurts you because it hurts your persistency. You owe that charge back, and you could run from it for as long as you want, but like someone's going to come get you. Like you still owe that money. It's negative value to the uplines, to the managers, to the whole organization. It's negative value definitely to the carrier because it's costing them money, which I mean obviously they recoup through the agent. But you know the thing is, if you're doing it for that purpose, don't even write it, because it's like for the people that chase recognition and just be like, oh, look at how much I wrote this week, knowing that a suicide closed a bunch of them, or they post dated it knowing that the client really can't afford it, but they just wanted to look good on paper, for that week. It doesn't serve you any good. Like the thing is, run a legitimate business. It's not about what you can write. It's about what you can keep.
Yeah. And I think we learned this a lot from our old company, because they actually gave bonuses based on persistency numbers. Yep. The higher persistency was, the higher bonuses for new businesses being written. That might be something that we can
plus, you get renewals. If your business is constantly falling off in the front, you're constantly have a debit to the carrier. And then, like, when they just complain, like, oh, I don't get any renewals and blah, blah, blah. I'm like, you should write better business.
You got no residuals to get renewals.
You didn't keep anything on the books, or not enough on the books.
Yeah. So that might be something we can suggest on creating some bonuses based on persistency to increase bonuses based on that.
Well, a lot of the bonuses are, they do have
a minimum
requirement,
but not tiered persistencies compared to our old company, which is really good, because like if you had like a 90% persistency, man, their bonuses were like 20-30% higher. Yeah. So it might be something we could bring up. Yeah. But that's all the topic we have today. If you guys liked what you listened to, please like and subscribe on our YouTube page. It's on FFL Elite Clips, and if you liked it, please share it. So we'll see you guys next week.
Hey guys, thanks for watching. Appreciate you guys taking the time. If you guys enjoyed what you guys saw, please like, subscribe, follow, all that good stuff. Also, if you guys have any future topics that you'd like us to address in the future, we're here to try to provide value for you guys, just like you're providing value to us. Appreciate y'all.